The end of the year is approaching quickly, which means audit season is right around the corner. If you haven't already received them, you should be getting your engagement letters and request list very soon. With that in mind, here's a tip for you to consider as you prepare for the upcoming audit season. Dennis, what are some things that you'd recommend to companies undergoing a financial statement audit to ensure a faster, more seamless audit?
Well, there are several key areas you'll want to focus on. The first and most important is to make sure you're closing your books monthly or quarterly. While it may seem obvious, this is the most overlooked item, but one that can be the biggest time saver if completed. When closing your books, be sure to reconcile the significant accounts. As you're closing your books, if you have questions about how an unusual transaction should be recorded, don't guess. Reach out to your auditors to discuss the transaction so you're sure that they're recorded properly. If research needs to be done, the auditor will be able to complete it for you before the audit starts. Documentation is also very important. If you enter into new agreements during the year, save copies in a folder and send them to your auditors before the audit starts. Scheduling an early planning meeting with your auditors is always a good idea. You'll want to establish a timeline and ask for a preliminary request list. This list helps you see what items you might be asked to provide and allows you to prepare any necessary schedules when closing the books at year end. You should also discuss whether your auditors would like your information in a specific format.
Thanks a lot, Dennis.
You're welcome, Adam.
Hey Rich, can you tell us what you've been seeing for investment companies and broker-dealers?
Sure. As Dennis mentioned earlier, documentation is critical. Specifically with investment companies, you want to make sure you have copies of any amendments to the fund documents, specifically the limited partnership agreement. Have copies of any side letters you may have entered into during the year, as well as gathering all subscription and withdrawal documentation. This is important for the audit team as well as the tax team. However, the most critical relates to the documentation related to the valuation of securities that could be considered hard to value. This would include memos discussing the valuation methodology and support for any inputs used in any models, discount rates, etc. As far as broker-dealers are concerned, similarly, any amendments or new agreements that you entered into that could impact your net capital requirements under SEC Rule 15c3-1. Any transactions that you entered into during the year that could change the exemption you might claim under the Customer Protection Rules, SEC Rule 15c3-3. As part of your information gathering process, you want to make sure you have copies of all your quarterly and monthly focus filings, as well as your form custody and other supplemental information, as well as copies of any regulatory correspondence, whether it be from FINRA or the SEC due to inquiries or routine exams that they may have completed. With regard to financial statements, subject to the SEC independence rules, auditors are not permitted to draft the financials or the related footnotes. It's important that management take the first try at drafting the financials and send them to their auditors early for review and provide comments. The auditor is permitted to provide comments and feedback on those financial statements, which will then give management time to perform the necessary research on any new accounting pronouncements that could impact those financial statements.
That was great. Thanks a lot, Rich.
Sure thing, Adam.
If you have questions about how to prepare for your audit, please contact your accountant or untracked early advisor.